from Hyderabad and Anchal Kapoor from Amritsar. There are two speakers of today's evening. This is a very good gesture of AFTP. Uh, the GST is a burning subject from last 3 to 3.5 years. It is going on, and in the finance budget on 1st February 2021, Madam Nirmala Sitharaman has given some incentives to the MSMEs as well as the Atmanirbhar Bharat and other things also relating to GST. But these budget proposals should discussed in length by our federation with all the members. That's why we requested to our people, Sri Rajesh Mehta ji, who is a vice president from Central Zone, and our Sachinarayana Secretary General, to conduct a program on this issue. It is very needful and very educative program to all the members for the purpose of benefiting in fraternity section. These GST paper writers who are the speakers of today are well versed and well known in all over India, and they would like to give their views relating to the budget proposals in relating to indirect tax. That should be very much helpful to each and everyone. Their view we would like to take, and in future we would like to apply in our mind, and then we can move further in our practice, day-to-day practice. With these words, I thank Sachinarayana and Sri Rajesh Mehta ji and all other colleagues who are joined over here. Some people may join later. Thank you very much. Thank you.
Thank you.
Over to Sachinarayana.
Thank you. Thank you very much. Thank you very much, sir. And let me introduce our Ganesh Purohit, sir, because he's a well-known person in AFTP. He's a senior advocate from Jabalpur. He's past president of AFTP. He is an expert in income tax matters. He appears before High Court and various other courts. With these very few words, I introduce Sri Ganesh Purohit ji. And now I request our M. Amarendra, Joint Zone Vice Chairman, to introduce today's guest speaker, Sri Raghunath Akasham, Chartered Accountant. Over to you, Mr. Amarendra.
Thank you, Mr. Satyanarayana, Secretary General, and President, National President, Mr. Srivastava and other seniors.
Your video is off.
Huh?
Your video is off.
All the seniors of the fraternity and the members present here. I am very much thankful to Mr. Satyanarayana for giving me an opportunity to introduce the eminent speaker to today's evening, and Mr. Raghunath Akasam, Chartered Accountant. Having a Chartered Accountant firm, a reputed organization in South India, in Hyderabad, and also is a member of Fellow of Chartered Institute of Chartered Accountants, and also associate member of Institute of Cost and Worth Accountants of India. He is also president of HDFC, that is Hyderabad Directors and CEOs Forum. It is very fortunate to introduce a eminent speaker, and he is a well experienced speaker in the banking sector, and he is a great guest faculty and speaker in the areas of banking, finance, and investment banking at reputed institutions like ISB, IIT Kharagpur, FAPSI, JNTU, and so many staff colleges of banks and various forums, and also corporate training institutes. He is the independent director of boards of various companies. Apart from this, as a personal interest, serves as a speaker on personality development and leadership at various forums. He also started running a charitable institution called Akasam for taking up a voluntary charitable works. He started a career as a financial consultant to do various business houses as a partner of the firm, and he is having experience of providing financial advices for businesses to create multiple and optional finances. He has the experience of representing businesses with domestic international bankings and investment funds of repute. He helped several startups in Hyderabad, in and around Hyderabad, and also advising on right funding options. With this short introduction, I present Mr. Raghunath to this August gathering. Thank
Thank
you.
you. Thank you very much, Mr. Almander. Now I request our Ganesh Purohit, chairman of the session, to initiate the discussion on the today's topic.
Thank you, Satnarayan ji. President of the AIFTP, Maladi Srinivas Rao Garu, our General Secretary General, SS Satyanarayanan Garu, and today's learned speaker, Shri Raghunath Akasam Garu. Friends, it is a great effort on the part of AIFTP to have organized this webinar. And the subject for today's discussion is economic analysis and incentives to MSME. Friends, you must have witnessed that in her budget speech, the finance minister, Mrs. Sitharaman, she has given a paradigm shift to the budget proposals, which were normally there in the earlier years. So far, we have been observing that for giving impetus to industry and other things, they used to offer deductions and exemptions under the Income Tax Act. But for the first time, we have seen that there is not much exemption and deductions have been offered, except for builders, for affordable housing and some extra exemption for loan, interest on loan, and things like that. But the effort that has been made by the finance minister is in respect of increasing the expenditure, and that too mainly on the infrastructure. The development of economy, according to me, depends on expenditure and not on exemptions. We in Asia, we are right from our childhood, we are taught for savings. So we are a saving oriented community. Whereas in the Western world, they are expenditure oriented community. And that is the reason that so far in the past century and in the present century, the Western countries are leading in economy and we are lagging behind. But now this situation is changing. The economy is now shifting from west to east, that is to the Asian countries. And the most important reason for that is of our human resource. We have tremendous human resource in India. 35% of our population is less than 30 years of age. And that is the human resource that has to be exploited for the development and betterment of our country. So keeping in mind, and then they had a very big handicap of the COVID pandemic. In the year 2021, our economy has suffered by 9.7% physical deficit. It might be more, we don't know. But they are projecting that the GDP growth is going to be up to from 9.6% to 11%. That is projected GDP growth. And I'm sure we are going to achieve that kind of GDP growth because the budget this year proposed is mostly they have proposed expenditures on infrastructures and say for textile, they have proposed that there will be 17 new textile parks. I feel that to strengthen economy, we have to adopt the methods which support in which we are good. In textiles, we are one of the leading countries in the world. So that is the area the government is concentrating upon. And that is an employment oriented industry also. So while proposing incentives in the budget, the government has to keep in mind the fact that it should not only boost economy, but it should also be employment oriented. Because in our country, the biggest problem is of employment to such a vast population. So that has also to be addressed when they are making proposals in the budget. I am not going on the technical details of the budget, because Mr. Raghunath Akasam will be addressing on that, and I don't want to encroach upon on his area. But in general, what we have seen is that this budget has shown a new era, a new direction. And if the country moves into that direction, I'm sure that we will definitely make progress. There is a saying in Sanskrit, Rinam Gritva, Gritam Pitva, means take loans and drink ghee. In Western countries, the entire economy is based on loans. They are using credit cards left and right. And that is the reason that they are spending more than what they earn. But in those countries, the system is such that they are sure of their earning and they know that they can make repayment of the loans which they are taking. Whereas in our country, the income is not definite, especially for we professionals, because our income depends on our clientele. If our clientele is doing good, our income will be good. If our clients are not doing good, then we are also going to suffer. So in that case, we cannot really bank upon taking loans and spending more and more and going out of our uh, हिंदी में हम कहते हैं कि जितनी चादर हो उतना ही पांव पसारना चाहिए. So that has to be kept in mind, and no doubt that economy will get boost only when people will spend money. But even then, the government has in this budget given lot of incentives, particularly like in leave travel concession. They have given option of encashment, and if they purchase white goods, they can be reimbursed. That is just to uh, make the government employees spend more, so that will give boost to production of all the production and sales in the market. So I think it is a very welcome budget, and in given the financial constraints, whatever finance minister has done, she has done an excellent job. And now I will hand over the mic to Mr. Raghunath Akasam for his expert comments on the provisions of the finance bill. Those are related to the and his analysis about the economy as projected in the budget. Thank you for giving me this opportunity. Thank you, Mr. Over to you, sir.
Over to you.
Thank you, sir. Thank you, sir. And thank you all for giving me this opportunity. And welcome all participants for the program. And it is indeed, I'm fortunate to address all of you. So though I am a qualified chartered accountant, I should admit that I never did the tax practice. I have always been a finance guy, in the sense I have been into financial services right from the beginning in my profession. And it is a great opportunity to address All India Federation of Tax Practitioners. So on the subject, which is my pet topic, MSMEs, and I have been last 3 decades associated with MSMEs, and there will not be a day where I would not meet an MSME entrepreneur. So, in fact, when this topic has been given to me, that analysis of Indian economy and incentives in the budget for MSME. So I felt its view on Indian economy primarily coming from me would be looking it from the financial professional point of view and also from the industry point of view. And the small disclaimer that there are no political views or overtones in whatever I express, and it is purely looking from the prism that whoever is the government of the day and whichever is the government of the day, all the compulsions government would have is to match the receipts to the destination of employing these receipts to growth. So I dividing it between capital expenditure and revenue expenditure and ensuring that the economy grows. So views may differ, but any government will take all the views into consideration and try to do this tightrope walk. So coming to the fundamental of our economy. So Indian economy is a very interesting economy with a right mix and balance of sectors. So when you look at Indian economy as 5th largest economy, and also when you look at purchase power parity, third largest economy. So Indian economy has this very interesting mix from which it gets its GDP. So if you look at agriculture, which has been backbone of the country where a lot of people depend upon, contributing still 16 to 18% to the GDP. One interesting factor is the growth of service sector in Indian economy. So close to 50%. So it is 48.8. So close to 50% services sector contribution we have achieved. So whereas it's not the same earlier. So earlier most of the contribution used to be agriculture. So it's a significant shift that Indian economy is now service dominated economy. So industry and agriculture together contribute to balance 50% and 16% being from agriculture. So balance 34% comes from industry and manufacturing. So this is a mix which I regard as interesting mix because the agriculture gives the self-sufficiency to the economy. So the basic structure is such that we are not depending on any kind of pandemic or any kind of adverse position on other countries for food and resources. And services, where when service economy improves, where country having largest population, that is another good sign that the manpower contribution to the economy is going to be great. And you read it with the literacy that the company rate that the country currently is having, which is interesting number again, that about 77% literacy, though there is still some imbalance between gender when you look at literacy perspective, female literacy being slightly lower. But still, with the increasing literacy rate and increasing service economy, service contribution to the GDP, the country is really poised towards more innovation and poised towards better balance with the technology democratizing most of the resources, technology adding a lot of strength to the country to balance itself from any situation. And if you look at the sovereign status of the company and sovereign rating of the company, so the country has never, there is a bit of a debate on rating that the company, the country receives. So we always feel as Indians that we are not adequately rated. The inherent strength of the economy is not really reflecting in the rating that the country gets. And there is it's a very valid argument if you look at country's ability to handle its debt under no default status under any circumstances and raising economy with a good growth rate, which is inviting foreign direct investment in a big way. And even during pandemic, we have witnessed good foreign direct investment into the country. So if you look at the sustainability of the country for the debt, when you are having higher growth percentage and the higher growth rate of the country is higher than the rate of interest at which the country is borrowing. So that means the debt sustainability that is there in the country. The debt sustainability is one great factor which improves the sovereign status of the country. So, and one good thing that is happening is an entrepreneurial ecosystem in the country. So if you look at last decade, is filled with many stories where entrepreneurial ecosystem has significantly increased and the startups growth in the country has been pretty impressive, which always signifies the usage of technology and also the innovation in the technology which Indian entrepreneurs are able to prove and able to put on ground as implementation. So when you look at these broad aspects in the country is poised for a great journey and great growth. And when you look at this, what has happened during COVID could have been a major break for the country. And could have been a huge negative impact on the country's growth. Yes, it impacted. COVID has impacted the country, but there are both minuses and pluses to the story. So when you look at COVID impact on the country. So if you look at manufacturing and industry, so where physical contact is very important, there is a degrowth. So that there is a decline. And again, services, where again physical contact is important. So the area of services where contact is important has been affected. But other areas where digital contact is there, still it flourished and it grew. So if you really look at this situation, the surprising stability, if you see, is added by agriculture. So agriculture productivity has not been greatly affected during the COVID. And if you look at growth in agriculture is 3.9%, even that, considering the COVID period has happened, because we entered this COVID period when you are getting productivity of the Rabi crop. And when you are sowing Kharif by the time of June, July, so you have come to a situation where the impact of COVID has not stopped any production activity of agriculture. So that way, so the agriculture contributing 16% to the GDP of the economy is not greatly hurt, though there are instances that in certain pockets there has been an issue. So leaving that, when you have seen post-COVID, the revival that has happened. So when you really look at economic survey, so economic survey points to V-shaped recovery. And if you look at various numbers before us, yes, there is a V-shaped recovery, which we are witnessing in several areas in the country. So this shows a very quick revival of the economy and the resilience within the economy, which is present. And there are some interesting numbers that I will put here. So when I talk about it, so that will surprise you a bit, that if you look at foreign exchange reserves of the country, which is strengthened in 2021 to $586 billion. And another important point to read along with that is the foreign investment that has come into the country in the 7-month period of April to October. So April to October FDI is about 27.5 billion US dollar. So this is about 15% increase from the previous year. So when you look at this, you will understand that Indian growth is recognized world over, and India is becoming that interesting pocket where in Southeast Asia, so India is becoming a very key growth economy, attracting foreign direct investment into the country. And look at foreign portfolio investment in the same period, it is about 9.8 billion, which is an all-time high. So what it means is that the economy is being trusted upon by overseas investment, that Indian economy returns, offers highest return because of the highest growth the economy is witnessing. And the quick revival of the country. So from pandemic, whatever we are now calling as V-shaped recovery is taking place because of the essential features of the economy. So which are robust features. So now coming to current broad picture of the budget, if you look at. So what happened from the estimates, if you look at the revised estimates of budgets, so there is a fall in the revenues estimated by the government from the tax revenues. So tax revenues of the government have considerably reduced, and government had to balance with market borrowing to match up the number of 34,50,305 lakh crore. So if you look at current budget size of this estimated receipts, it is standing at 34 lakh 83,236 crore. So there is a reasonable basis that if you look at current numbers, there is a reasonable basis for these receipts happening. If you consider total receipts of revenue receipts. Yes, there is an element of borrowing which has been assumed in capital receipts, which is essential from the current context, but where your essential from the current context, where your borrowing is likely to be 12 lakh crore of rupees. But if you look at the rate at which the country's tax revenues are getting into line, and the government has committed about 5 lakh crores, 5 lakh 40,000 crores to be precise, on the capital expenditure to be incurred to increase the spend in the economy so that this spend propels the growth. As we have already discussed and other speakers told, so India is a saving economy. But if the government takes the responsibility of a spend, particularly if the spend is on a key infrastructure, this is likely to propel growth in all the sectors of the economy. Because the key infrastructure play happens through many players contributing to this capital expenditure items required to supply both services and goods. And most of these goods and services are provided by MSMEs. So, in a way, though there is a commentary that not much has been announced as incentive to MSMEs. So I always believe that rather than a clear incentive to each industry or each sector or for MSME, if an environment is created in the country for the growth of these MSMEs, that is more beneficial for MSMEs than an odd subsidy, than some incentive bracketed under certain performance conditions, that this incentive will be available in these desirable conditions, or if you fulfill this, these incentives will be available to the industry. So this is in a way again a sub-protectionism. But if you give that level playing field for this industry, if you are going to create infrastructure for the industry, if you are going to create ease of business for the industry, that is where industry is going to thrive. And most of MSME sector players expect that from the government. And on this count, particularly on the count of ease of doing the business, enabling business to grow, enabling knowledge to reach the entrepreneurs, I think technology is helping, and government is using the technology to enable industries to get level playing field. For the last decade, I have been observing most of the manufacturers, clients, MSME sector. So they are saying that the measures adopted by the government is enabling them to get better market access, better market pricing, and some right protection from any dumping from any other country. So this is where I feel a domestic manufacturing improves and an MSME flourishes and finds its way. Now, if I have to look at what has been done for MSMEs in this budget, I don't say they are direct incentives. So I divide this into 4 aspects. One is a direct allocation. And second is several steps which enable ease of doing business for small businesses. And third, certain protection given to certain sectors of industry by adjusting customs and import duties to protect domestic industry. And there is another section which is overall impetus, which will help MSMEs to flourish. Now I will come to first aspect of allocation to MSMEs. So if you look at a pure number, absolute number of allocation to MSMEs, if last year in the last budget, if the allocation is 7,572 crore, the allocation is nearly doubled in this budget to about 15,700 crore. Yes, there is a slight misreading that is possible in this allocation because part of this 15,700 crore allocation goes to ECLG scheme, Emergency Credit Line Guarantee Scheme. So that is also covered in this allocation. And this has been a greatest help that has been done by the government to the industry. In times of crisis, when COVID happened, so I have witnessed several clients of us coming for urgent financial help, and the liquidity was of foremost importance because you have to have liquidity in the times of crisis to handle the crisis and to keep up the spirit of the employees. And you definitely know at the time that you are not going to receive money from your debtors, customers. So then you have to feed that difficult period. And at the time, we don't know how long that period is going to be. And that is the time where 3 lakh crores of allotment has come in from the government for emergency credit line guarantee scheme, where 20% of the limits has been given to companies to offer liquidity as a loan which is automatic and quick without much of appraisal into eligibility of that loan. On broad parameters, this liquidity has been given to several MSMEs. So this has helped MSMEs big way. And when July, August, September, so when in services industry staff started coming, in manufacturing, your supply chain gets slightly established. In this period, so this was very right infrastructure, the right environment for the MSMEs to get back on the rails. And the key link has been the ECLG scheme. I don't say it is adequate for every MSME because each MSME has its own working capital cycle and each MSME has its own unique financial needs. But this has given that minimum support where they are not demotivated completely and are helpless. So this is with respect to direct allocation, and direct allocation, part of direct allocation is also going to skill development of workers, which is important. If you look at MSMEs, mostly getting talented workers become important. So semi-skilled and skilled is a tough resource pool to get. You do get unskilled, but MSMEs try to train these unskilled and lose significant time in building their manpower. So some allocation which has come from the budget for skill development centers for the employees of MSMEs is a welcome step. So this is as far as the direct allocation is concerned. So this where criticism has come in that the allocation could have been more. Some more direct benefit could have been done for MSMEs. Yes, definitely. I agree with that. But there are definitely certain good steps which empower MSMEs. So that has come in the form of ease of doing business. So when you look at ease of doing business for MSMEs, mostly what happens with MSMEs is MSMEs struggle with the form of organization. So if an MSME is a proprietary, it is an unlimited liability. So the entrepreneur carries huge liability. So where it can go beyond his business risk capital, it can go on to the person. And when it comes to partnership, it is the same unlimited liability. So that's where the forms of LLP have come in, and the form of OPC, one person company, have come in. So where MSMEs have a choice to be limited liability undertakings and can pursue business, where they are not personally hassled for any negative development in the business. So two major points that have been coming in this budget in these two areas. So LLP compliances, the penal provisions were also criminal punishments, criminal offense, when you really as an LLP don't follow regulations. So, but now decriminalization has been done where an LLP, any compliance requirement an LLP breaks, so it will not be treated as a criminal offense. There could be some penal provision, but not treating it as a criminal offense. So this is one good thing that is again comes as a part of ease of doing business. And then one person companies have had this problem of inviting any investment into the company, as these were not automatically converted into limited liability companies. Though OPC is limited liability undertaking, but it is one person company, and automatic conversion of OPC into limited liability company, private limited company, was not there. So now the budget comes up with a change that OPC can convert itself into private limited or public limited, depending on the need of the company. This is in fact a significant step. This is in fact significant step in the sense, today if you look at, most of the growth of the companies comes from investment. The growth of the companies doesn't come from bank finance. So banks themselves today are not in great shape, and banks' ability and risk appetite has come down significantly. And as banks have to fetch for themselves, be profitable, no more development financing is practically really possible from banks. Hence, for entrepreneurs to raise finance for the business, they can't treat as earlier bank as a major source of finance. Now the business is mostly of coming together to do business, share the investment, and reduce the risk by joining with partners. So when this is happening, where any interesting idea, any innovation, there are private equity and venture capital funds going to invest into these companies. So this is the ecosystem today. And any one person company can invite investors if the conversion of one person company to private limited company is easier, because investors prefer private limited company form of organizations for investment to have preferred rights as an investor. So this is one significant step, and I appreciate more as an investment banker that most of the time when small entrepreneurs come in, we advise which form of organization to go as a private limited company. And private limited company has high compliances. So there is hesitation from entrepreneurs to go with the form of organization of private limited company. So when OPC is established by an entrepreneur, this conversion gives him an option that whenever he proves himself in OPC, he gets a traction, doing well. To go to the next level, he needs investment. He can invite partner, and by converting into private limited company, he can govern the partnership. So that is, this has become investor friendly step into MSMEs. So these two are very crucial soft factors. I mean, that's going to help MSMEs in a big way. And there is again third, which I discussed while just a few minutes ago, that private limited companies have compliances. So Companies Act has not given significant benefit to small companies in having lesser compliances. So primarily Companies Act has been for the protection of minority shareholders and creditors. There's a lot of compliances that have been entrusted on a private limited companies. A small company defined under Companies Act 2013 had 50 lakh as capital limitation and 2 crore as revenue limitation, that any company below 50 lakh capital paid up capital and any company below 2 crore top line, that is revenues, is treated as a small company. Now in this budget, these thresholds have been revised. So paid up capital is increased to about 2 crore, up to 2 crore. Companies having paid up capital up to 2 crore, companies having revenues up to 20 crore are defined as small companies. And this is going to pave way. The reason this has been done is to help small companies by freeing themselves from certain compliances. And again, ease of doing business comes in. So now these are some of the major steps that have been done in this budget for ease of business, which as a person helping MSMEs for several years, I fully appreciate and feel they are really useful. And another aspect, if you look at, so resolution of bad loans or resolution of NPAs, restructuring. So for this, MSMEs are going to have separate framework. So they are not treated as normal companies, and a separate framework understanding the MSME conditionalities is being introduced. So which is again a welcome step in ease of doing business and helps MSME enterprises. And there are of course some tax related provisions. So where tax holiday and capital gains exemption for startups, majority of startups being MSMEs, is extended by one more year up to 31st March 2022, which is going to help MSMEs to some extent. And another aspect that has come in is digital mode. If you are subject to tax audit and if you are 95% of your business transactions are in digital mode, the tax audit limit of turnover is increased to 10 crore. So up to 10 crore, there is no tax audit in such companies where digital transactions are high. So this helps new age companies, particularly companies which are operating online models, selling models. So where digital payments and digital transactions are in vogue, cost transactions are less. So this provision is going to help in ease of doing business. Now, if you look at protection, there is some additional protection that has been done for the MSME segment companies, applies more to MSMEs. So these are some duty corrections. So if you look at the copper scrap, customs duty has been reduced. And this reduction helps companies. Then if you look at steel items, there has been again customs duty decrease, which helps companies which use this steel as raw material. Most of the MSMEs do so, and also for recyclers. It helps MSME manufacturers depending on the scrap and steel items, and also recyclers who depend on scrap. So that becomes cheaper. And you look at solar inverters and solar lanterns. So there has been increase of customs duty from 5% to 20% for inverters and 5% to 15% on lantern. So these two are going to help domestic manufacturers because imports become expensive and domestic manufacturing becomes competitive. So this is one measure that helps domestic industry. And similarly, import duty increase has been done on certain areas. If you look at, the idea is to help make in India, help domestic manufacturers. So if you look at mobile charger components, there is increase in import duty. So I have a client doing this, he's happy. Then mobile phone parts, PCBA, camera, connectors. So all these areas, there is an increase of import duty, which makes domestic manufacturer get benefit from it. And automobile parts, particularly glass, wipers. So these parts manufacturers majorly are MSMEs who manufacture for OEMs. And these MSMEs get benefit because import is becoming expensive with increased duty. LED lamp manufacturers, import duty has been increased. So domestic manufacturers of LED lamps and lamp parts like PCBs get benefited. And the same thing is going to happen with compressors manufacturer, refrigerators manufacturer, and air conditioners manufacturers. So these are some of the duty measures proposed in the budget, which will make domestic manufacturers, predominantly MSMEs, get benefit of being competitive in the market. So these are some of the areas where protection has been extended to MSMEs. Now look at the fourth thing. So we have covered direct allocation. We have covered ease of doing business steps. We have covered protection for particular industries by duties, increase and decrease of duties. And now, when you look at overall impetus, this is what I call is overall environment and overall impetus. So when we look at some of the manufacturers who do in good scale in China, so what we and most of the time we think that Indian manufacturers are not competing, not able to compete. What happens is the infrastructure, basic infrastructure provided by the government being conducive for a manufacturing of a particular scale to be economical and churn out an economical product is helping the country export. And if India has to improve in Make in India, so the similar infrastructure need to be superior for the industry. And one good point in the budget is creation of textile parks. So creation of 1 mega textile park and 7 other textile parks. So overall, in the period of 3 years, is proposed in the budget, and which is going to help Indian manufacturers gain significant advantage and MSMEs find superior infrastructure to work with. And if you look at some more infrastructure related spend that the government is doing, so when you are improving road infrastructure in the country, healthcare infrastructure in the country, and rail infrastructure in the country, the benefit is passing on to several SMEs who have their supply items in building these capital projects, and all are going to get additional market benefit because the spend of the country is increasing in a significant scale, and the spend has to reach as an order to several MSMEs. Even if you look at metro projects which are proposed in Tier 1 and Tier 2 cities, these metro projects require a lot of supply items, and all these supply items are manufactured by MSMEs. If you look at all RDSO approved railway products, fail-proof products, embedded system, display boards, signaling products, lamps, lights, coach lamps. So there are a lot of MSMEs doing this, each company 20 crore, 30 crore, 70 crore turnover. And all these companies are going to get significant boost of orders if the country is building infrastructure at scale and if the government is spending the 5,34,000 crore on infrastructure. So this I call it as an overall impetus that is going to happen for MSMEs. Yes, I definitely agree that we may not be seeing a direct tax or indirect tax direct benefits to MSMEs in this budget. No direct incentive to MSMEs, but I am very appreciative of these steps, which will improve MSME environment of doing business, empower them because they are not subject to rigors of doing business. So you have seen already some ease that a month to incorporate a company today has become a week to incorporate a company. And a threshold of amount of fee to be paid for initial capital has been removed up to 15 lakhs. So which is making cheaper to incorporate a private limited company, cheaper to form an LLP. And the introduction of technology, which has made things move easily, swiftly. So a decade we have moved, removing a lot of inconveniences for an entrepreneur to start his business. This is where I call, irrespective of governments, some of the steps technology has enabled. So technology has enabled, and even government using the technology to the right effect to ensure that MSMEs are empowered. So overall, I consider not a great negative for MSMEs in this budget. So it is, we want to encourage domestic industry. Some more measures would have been welcome, are welcome. And I'm not thinking that the budget is the only occasion that a government does. Definitely with the creative involvement with the government, a lot of things might follow. So this is my coverage on analysis of economy and incentives to MSME sector. And I see great future, both for Indian economy, the kind of resilience and interesting mix that the economy has, and also for MSME, because the significant addition of technology, which is helping MSMEs find global relevance, not a regional pockets. So it designs reaching most of the MSMEs. MSMEs able to see how things operate outside the world, outside India, and coming out with efficient products, coming out with better finished products, better designs, competing in cost. So I feel India has great future for manufacturing. So all along we have been saying that it's a very huge scale manufacturing that is required to find cost economies. To an extent, yes, but with an increased environment and ease of doing business, and with a reduced dependence on banks. Honestly, I'm not discounting banks here, but if you look at bank as an entity which has to earn its profits, which has to do justice to its depositors, and go with the norms which banks have to go by. Now, Basel norms being stricter for the solvency of the banks. MSME entrepreneur today is no longer looking at bank as a 75% funder of his cost of the project. He is seeing it as 50% funder. Remaining 50% can come in from his own investment or his partner's investment or any venture capital. And now the rates of interest in bank being low, a lot of capital is chasing opportunities to invest into profitable businesses. It's a good time. And we as investment bankers are stitching many deals today just because banks are unable to have that kind of a risk appetite. Their money comes with certain terms and conditions and after some traction. So that's why these soft measures is what investors want. Investors want the speed of implementation. Investors want the ease of governance and transparent governance for them to put money in. And that's my statement, that the budget has done its due for MSMEs. And we would like to follow and see what best can happen further to MSME sector. So I thank this opportunity, and any questions I can take.
Mr. Kasam, I would like you to throw light on this one-man company. What will be the effect of this one-man company provision in the budget?
Yes. Sir, one-person company provision in the budget is to enable one-person company to convert into other forms of organization. So this enabling helps any investor. Let us say today a one-person company has found good market, and the person with his capital has stabilized his business. He is doing good. Now the next step for an entrepreneur who is doing good is to go to the next capacity operation, next level operation. There the capital could be a constraint. His own capital, one-person company is only one person's capital, and his own capital could be limitation to grow. And whenever an investor wants to invest into a company or an opportunity, he looks at, he is the second person, a fund that is going to join. So then one person company cannot have another person in that same form of organization.
Okay.
Enabling this conversion, what government has done is, in such situation where investment ecosystem is high in the country, so investor comes today soon after seeing certain promise with the one person company, then the one person company can convert into limited liability, private limited company, where investor find it as a better vehicle to govern, come in and have his preferred rights, because investor can't have preferred rights in a public limited company. So he will have his preferred rights. And scenario two, if one person company has grown significantly and wants to go to markets, SME issue, the company gets eligible, it can convert itself into public limited company so that it can go for offer to raise money from retail investors. Now that the investment is only possible coming from various avenues like this, so it is going to be a very positive step with respect to OPCs.
And my experience is that earlier, when the government was following the system of giving incentives from tax, but when the position, like giving subsidies to the companies, but when it came to actual disbursement, then there are a lot of hassles and it resulted in a lot of litigation.
Yes.
And many a times the desired subsidy was never received. I have a case where we have went to High Court 4 times, and
Yes.
4 years back, High Court ordered the government to process the subsidy, and the government secretary has not processed it since last 4 years, because they say that if we allow you, then there will be many more MSMEs coming forward for claiming same subsidy.
Exactly. As we speak, there are
Yeah,
several SMEs waiting for subsidy.
that's right.
So most of the time we advise them not to wait for subsidy
Yeah.
and look at generating profit and generating investment, because that amount is not going to make a huge difference for MSME.
What happens, Mr. Akasham, is that the company with the offered subsidy, they put up their industry in a backward area.
Yes.
And there is a permanent cost, extra cost they have to incur for transporting their products and for transporting their labor force and all that they don't realize and ultimately end up in trouble. That is
Fully
what,
agree with you. Fully
yeah,
agree with you, and more so that in that backward area, if the
yes,
government has not made adequate steps to give right power,
right.
right roads, it's going to be a permanent hassle for the entrepreneur.
Proper water
So
supply.
instead of subsidies, it is the infrastructure that helps MSMEs.
So in this budget, we have seen that the government is concentrating more on spending on infrastructure rather
Yes.
than offering the tax incentives. So that is,
Yes.
as you rightly said, that is going to help the MSME in a larger way. That there will be more demand, and when there is more demand, then they get more market. So they will be benefited by a better market rather than by tax incentives. That you have very rightly said. Thank you for your good deliberation, sir. And I think if there are any questions, Mr. Satyanarayan, sir, you can monitor if there are any questions.
No, as of now, no questions, sir.
Yeah.
So anyway, thank you very much, Raghunath Akasham, sir, because we all thought that since they have not, no direct benefit has been given for MSME,
Yes.
we all thought nothing is there in the budget. But since you and our Ganesh Guru sir decoded a lot of things, so at least there is something hidden in each and every provision what the government is trying to put in. Thank you very much for sparing your valuable time with us.
Thank you.
We will definitely have some other session with you whenever it is possible for both of us. Thank you very much. Thank you very much.
Thank you all. I thank the participants.
Thank you. Thank you. Thank you all.
Satyanarayan ji, my job is over. So
नहीं अभी है बाकी है सर बाकी है अभी जीएसटी वाले सेशन आ रहा है शुरू कर रहे हैं और अंचल कपूर जी इज देयर अंचल जी you unmute yourself.
Thank you so much, sir.
Yeah.
Just a minute.
Anchal, you are a great speaker.
Thank you so much, sir. And it's indeed my pleasure to be here today. And Ganesh, sir, how you can say your job is over, sir?
That's what I said. That's the reason I said your job is not over.
Just a minute, sir. Yeah, sir, please.
Yeah, 1 second. I'll request our Mr. Siddheshwar to introduce today's speaker on indirect tax proposals and in the unit budget. Mr. Siddheshwar.
Thank you, Satyanarayan sir, for giving me this opportunity to introduce. Firstly, good evening to President Srinivas sir, past President Ganesh Purohit sir, and all the senior members present in this seminar. I'll give a brief introduction of CA Anchal Kapoor.
96B.
CA Anchal Kapoor is a chartered accountant and a graduate in commerce. And she has been practicing as a chartered accountant for the past 10 years in indirect taxes. Madam has delivered more than 100 seminars and webinars on GST. She is a faculty member for various certified courses. She has written various articles which are published on GST matters in AIFTP Journal, Tax Management of India, Tax Guru, and many other journals. She is an approved faculty of ICAI. She has secured a merit in a chartered accountant course and also board merit in graduation. With this brief introduction, I hand over the proceeding to Purohit sir to give a brief introduction before Madam Anchal Kapoor takes over the session. Purohit sir, the proceedings to you, sir.
Thank you. Thank you, Mr. Willamli. Friends, now we are going to have a topic of indirect taxes. As you all know that in budget, government cannot provide for GST benefits, because that is the domain of the GST committee, GST council rather. So they only give broad outlook and they just give their policy. And then ultimately that will be implemented by GST council. So in this budget, we do not see any relief on tax rates and all that. But the government has proposed that it's a very welcome proposition that has been given in this GST in the budget is that the compulsory audit has been done away with. And that's a great relief, I think, to the business sector. And you yourself can certify your returns now. So, and that has happened because of the digitalization of the entire system. I think government is making it compulsory for companies more than 100 crore turnover to have e-invoice. So when then e-invoice will be made compulsory, then the data will be available with the government and the importance of carrying out the GST audit will be lost. So that is the basic proposition in this budget, and no other relief could be announced by the government because that is in the domain of the GST Council, and central government alone cannot give reliefs from GST. So that is the reason that we don't find much about GST in the present budget of financial year 21-22. Achal is a very nice orator, and I have heard her on GST earlier also, and I really fascinate her deliberations. So Achal, I would not encroach upon your time, and I know that you are a very ferocious speaker and daughter of Punjab. So over to you. You can carry on now, yeah. Thank you.
Thank you so much, sir. And indeed, it's my pleasure to interact on this elite platform of AIFTP South Zone. And I'm thankful to all the office bearers for giving me this opportunity to interact today on the budget proposals. And thank you, Ganesha, for your words of appreciation. Those indeed matters a lot to me. So friends, sir has said, rightly said, that the budget proposals that come on indirect taxes are not much wider, but they provide the broad guidelines. And let me tell you, although we say that nothing much has been done on the GST issues, indirect tax proposals, but the number of changes that have been brought upon are not direct, but have long-lasting impacts. And in the times to come also, we will be seeing that the issues which have been arising time and again in the various judgments before the various courts, those have been put end to in one way or the others. So far-reaching impacts have been brought through this budget on the GST provisions also, which I will be taking up through the slides. Sir, may I share the screen, please?
Yes, you can.
Thank you. Right, friends. So I think so we all are ready to sail in this boat of decoding of finance bill provisions relating to indirect taxes. So a very good evening to all the viewers also who are present today at this time. Friends, let me tell you, Finance Bill 2021 has brought upon certain changes which are going to change the way we look at GST in the future, in the years to come. What are those changes? Let me first of all give you some broad idea about the changes that have been brought in. The points that have been brought in by this, firstly, sir, the provisions relating to GST amendments are contained in section 99 to 114 of the Finance Bill 2021, which will become the Finance Act 2021. So these are not to be implemented from right now. These will be implemented from the date to be notified in the official gazette. One thing, this point is very important when we talk about the GST audit perspective. So that is why I'm highlighting this point. If I talk about the few changes, the main highlights of it are, friends, the main highlights of this budget are like taxability of the clubs, taxability of the associations, taxability of the clubs for their members that have been brought in preview. Those have been made clear-cut taxable. And the main and far-reaching impact is input tax credit. Input tax credit is that part of the GST which is the beneficial provision, which everybody wants to avail. Avail to sab karna chahte, everybody wants to avail it, but it doesn't come in our hands. It keeps on slipping somewhere or the other by the various rules, the amendments, the changes that have been seen in the past. May it be the rule 86, may it be the rule 86A, or the various time-to-time amendments that have been brought in. So friends, abhi tak we were like in a dilemma that the rule 36.4 that has been inserted, the statements GSTR 2A or 2B, how much they are backed up by the law. So now a backup to those provisions, the legal sanity has been provided in the act itself to rule 36.4. Although I had certain critical points on it also regarding the amendment that has been proposed in, but yes, it has been provided a legal backing now. So if you say a credit is not appearing in my 2A or 2B, previously we used to say if you fulfill the conditions of section 16, you can take it. But now itself in section 16, they have introduced the provision that if a credit will not be appearing in 2A or 2B, we will go through the wording of the law also. So that will not be eligible now from the date when these provisions will be brought into force. So apart from this, as the Honorable Finance Minister also mentioned in her speech, that they have a vision that all the provisions relating to the fake invoicing to curb the malpractices should be brought in. So a broader perspective of these amendments have been taken in, where they are aiming at curbing the malpractices like fake invoicing. We will see that various GSTR 3B and 1 mismatches have been brought in to curb such sort of practices. So the impacts which we will be dealing in, and furthermore for the exporters also, a big change where the exports with payment of taxes is now not that easy a task. It will be available only for the notified goods and not for all the goods. So to start up with the amendments, so as I already discussed, that the clauses 99 to 113 deals with CGST, and only 114 deals with IGST. All these will be brought into force by a notification in the official gazette. So now, starting with the first one, these are the various sections, a summary of those that these have been brought into force. Now, friends, if I talked about the first provision, section 7, it talks about the taxability. The one in the red is the new clause being inserted, 7(1)AA. And you know, AA somewhere has been government's favorite. In 2 sections, we will be finding this AA now, right? So what they said in 7(1)AA, that the activities between the organizations and its member or its constituents will now be a supply. And with this, amendment in Schedule 2 has also been brought up, which by deleting a particular provision. So let's analyze these provisions. Friends, what is the impact? The club collecting the membership fee, providing services to its member, clear cut has not been brought under the tax levy. The word I have used here is safeguard the levy of tax. Reason, so practically also the clubs were paying the taxes, the organizations, the bodies, they were paying the taxes. But still, at the backdrop of somewhere, it was like whether the doctrine of mutuality hold goods or not under the GST regime, right? To curtail this thing that the doctrine of mutuality is not applicable in GST, the government has come up with this provision. Now let me discuss the entire background, the backdrop of this, the reason and why this amendment came. So it started way back when in the Young Men India case in 1970, the doctrine of mutuality was first brought in. What it said members and the clubs, the associations are not different. They are one and the same person. And when they are one and the same person, there cannot be levied any sort of taxes between the members and the body itself. So this is the doctrine of mutuality, which was holding good. Then an amendment was brought in the Constitution of India, under Article 366 to 29A. The 46th Amendment in Constitution was brought in, and it mentioned that a tax on the supply of goods by unincorporated association, it divided into 2, corporated, unincorporated, or body of members, for cash of a deferred payment will be taxable. There will be a tax on it. The same matter was brought to the High Court and then further to Supreme Court, and Supreme Court in 2019 itself in Calcutta Club Limited judgment passed the judgment that despite of amendment in the Constitution in Article 366(29)A, the doctrine of mutuality still holds good. It still holds good, and there cannot be levied any sort of tax. There cannot be levied any sort of tax between the members and the associations. This judgment belonged to an earlier regime, service tax regime, the pre-GST regime. But it was like that same impact is there, will be there in case of GST also, and the judgment will hold good. But to overcome the impacts and to end up all the litigations, the government amended the section of supply itself and specifically made the clause 7(1)AA and said, yes, it is a supply. And they also inserted an explanation also to overcome the mutuality, to overcome the entire the various judgments, and they put it there in the explanation that for the purpose of this clause, it is clarified that for the time being in force, if there is any judgment, decree, or any court or tribunal which has given the contrary decision, will not hold good. And they made the entire transaction activities as a supply. Now, if we critically evaluate it, let me talk about it. Friends, as I talked about Calcutta Club judgment, despite of these, there were various judgments also, like Rotary was in favor, which said it should not be levied. There was Apsara Cooperative Housing, which held it negative. So ultimately, to put an end to all litigation and to overcome the decision of Calcutta Club by the Apex Court, the amendment was brought in. Now, two deeming fictions were created in it. What? First, person and its member shall be deemed to be two separate persons. Doctrine of mutuality is no more there. They are deemed to be two separate persons. Second, supply of activities or the transactions that take place between one such person to another be deemed to be take place from one such person to another. So two deeming fictions by way of explanation have been inserted. But let me tell you, although they have made this change, but let me tell you that firstly, this is a retrospective amendment with effect from, sir, we are moving back to 3.5 years back, and this is being added over there. So in the light of, and as the test of justice and fairness, how the retrospective amendment hold goods, we have to see in the further, it will give in another round of litigation, I must say. Secondly, they have not amended the definition of deemed distinct person. Like in case of branches, we say the main is different, the branch is different, although under same pan. But here they have created a deeming fiction by mentioning that they will be two separate persons. Thirdly, sir, they have not made any sort of difference in the definition of consideration. And if I talk about consideration, it is from as per Indian Contract Act, there must be two persons for consideration. It must change hands in exchange. And sir, in case of consideration, they have not amended how a consideration can be when the doctrine of mutuality is being considered. How there are no two different separate persons. So although this amendment, this change has been brought in, for what purpose? To tax directly the transaction of the clubs, associations, societies between between the society and the members, between the association and the members. But still there are number of litigative issues behind it, which talks about because it is due to ill drafting of the language of the section. If you see here, supply of activities or transactions. Supply of activities of transaction. What do you mean by supply of activities or transaction? Sir, this amendment was proposed in the previous committee meetings also, and that is why it has come. But if we read the wording of those amendments and we compare which the actual amendment has come, you will really find it that the same has not been properly drafted. But as of now, it is a law. It has been made the part of it. It will be made the part of it when it comes once comes into effect. So what it says, yes, now the transaction between the members and the clubs, the societies, the association is very much taxable. The doctrine of mutuality does not hold good in the GST regime, considering the impact. Now, coming towards the next most important amendment is of input tax credit. Friends, section 16 used to have 4 conditions. So friends, can I have a look on the chat box too now? What are the 4 conditions that you talk about that were there in section 16? Yes, absolutely, sir. The definition of consideration is so old therein. So amendment in section 7 is again to open long litigation. Absolutely right, sir. Absolutely right. So now, friends, what were those 4 conditions which were there in section 16? There were 4 conditions in section 16. We talked about there must be a tax invoice. You must write something, at least write tax invoice. Tax must have been paid. Actual receipt of goods or services. Absolutely, Mr. Bansal, invoice, tax invoice. Yes, returns must have been filed. Sir, I can't read your name. It's coming with admin. Right, so 4 conditions we talked about. Now, they have entered AA also. No, Mr. Jyotin Vasanji, 180 days payment is the subsequent part. I am talking about 16.2, which are the 4 main conditions for availing the credit. Were tax movement, there must be goods movement, goods or services must have been provided, tax must have been paid, tax invoice must have been there, returns must have been filed. Now they have added 16.2 double A also. What 16.2 double A says? Let's read the wording. Invoice or debit note which has been referred above means just tax invoice ki hum baat kar rahe hain, the tax invoice or the debit note which we were talking about, that must be furnished by the supplier. Furnished where? In his GSTR1 in the outward supplies. And says, and important, such details have been communicated to the recipient. Communication by what means? 2A or 2B. So, sir, now you have a tax invoice also. You have paid to your purchaser also, but it is not reflecting in your 2A. Are you at fault? You tell me. Are you at fault? No, but still the credit will now not be available till the time such details are reflecting in your 2A or 2B in the manner as may be prescribed under section 37. So what was the impact? Sir, there has been a long round of litigation where we all were waiting. That 36 rule 36.4 is ultra wires, the act. Now it has been made the part of act itself by putting the section 16.2 double A, which says that yes, it gives backing to rule 36.4 in one way. Right now 2A 2B has been given a more force now, that yes, the entries must come in 2A or 2B. It beyond doubt puts end to the litigation. It puts end to the litigation that this is ultra wires, now it is not ultra wires. But friends, why this amendment came? You know, in the entire fake billing which the government wanted to curtail, what actually was happening? I am a person, I'm not paying tax. Not paying tax. Even a penny of tax is not being paid. What I used to do, I used to file my GSTR1, not filing my 3B, because the tax was to be discharged through 3B. They used to file GSTR1, it used to come. Now you will see a number of changes. May it be the suspension, may it be the cancellation, may it be the various other section 16 itself. Now we'll see the government wants the 3B and 1 should match to overcome these fake invoicing issues. So that is what they said. If we read all these amendments in conjunction to one another, so may it be suspension, may it be mismatch, may it be blocking of GSTR 3B, GSTR1 on non-filing of 3B. Because if you will now not file your GSTR 3B, you will not be allowed GSTR1. You will file 3B, you will pay tax. The amount of tax in 3B and 1 should match. Otherwise, your number will be suspended. And sir, if your number will be suspended, please make it a point that yes, your e-way bill will also got suspended. Even if you open it, if you get it opened from the concerned officer by putting this, but for those many days, the e-way bill will remain blocked. So ultimately, if I talk about that, yes, it has been come to put end to the litigation. 2A, 2B has been given force now. But still, while amending, now I would like to put a point here in front of you. Sir, what rule 36.4 says? It gives a leverage of 5%. It was 20%, then reduced to 10%, and now reduced to 5%. So in such a situation, 36.4, wo jo extra 5%, the leverage of 5% which was provided by the rule is now not backed by the law. Now see, I discuss. Section 16 says that yes, you will get the credit of only those bills, those documents, those invoices on which are appearing in your 2A or 2B, which have been furnished by the supplier in his GSTR 1. This is what now amended section 16 will say. And if I talk about rule 36.4, what it says, you can still claim 105% of the amount that will be reflecting in your 2A or 2B. So ultimately, by bringing this change in section 16, we are somewhere challenging the leverage of additional 5% that is being provided in the rule. Sir, ultimately saying, what is the vision of the government? You will get only that credit which is reflecting in your 2A or 2B. That only will be available. Nothing more than that. Secondly, don't you think that they are asking you to do something which is impossible? Sir, a number of judgments, may it be Arise India by the Apex Court itself, by the Delhi High Court, KK Industries by the Apex Court itself, it has been clearly held. You cannot force me the impossible. If you have paid me the money, if while purchasing the goods, if you have paid tax to the supplier, to the person concerned, and if he is not depositing it, you are denying me my ITC. How I can control the action of some other person? How I am expected to keep the track whether my seller, the dealer, he is depositing the tax or not? So although these changes have been brought in, and we understand the government perspective too, it is basically the loss of faith, the loss of trust between the taxpayer and the government due to the scams which we have seen in the past few time periods since the time GST have come. So in order to curb those practices, these changes have been brought in. But who is the sufferer, sir? Because of few bad fishes, the entire people will now be suffering. Reason, if I pay, example, purchased a furniture, I took the credit, it was my office furniture. The person concerned has not deposited. It means I should say that person, ki, Bhaiya, please, you get your amount deposited, otherwise I will not get the credit. How you can say to the another person that you have to do it, you have to file your GSTR 1 timely, otherwise my credit will be postponed. Listen, the person says there is a marriage or a wedding at my place, he is late in depositing his GSTR 1, your credit will be gone for that period, it will get deferred. He will be delayed. We will do delay in filing his GSTR 1. Your credit will be delayed. He will not file his GSTR 1. Your credit will be gone. So all these changes must be considered from the point of view that yes, you cannot enforce the impossible. So Aparna ji says when supplier files GSTR 1 on quarterly basis, we will come to it also, madam. If he files on quarterly basis, then the new facility IFF is now being provided. So somebody also wrote up in the chat box that what about the legal backing of what the changes? Yes, we say the various judgments of KK Industries, Arise India, which were in the pre-GST regime, have now been put to an end in a way by bringing the provision in section 16 itself. And you know, sir, the provision has been inserted in cancellation of registration also. The amendments which came in December month, they mentioned that if you will not fulfill the conditions of section 16, your number will be cancelled. You see the sequence of the events that have taken place. Your number will be cancelled. If your amount will not appear in 2A, 2B, now it is a condition under section 16 that you will get the credit. If you take the credit, even if it is not appearing in your 2A, 2B, your number can be liable to be cancelled. And sir, input tax credit has the far-reaching impacts. So I would say the amendment that has been brought in, we understand the basics behind it, but that should be done in a proper manner. And you cannot ask something that it should not be enforced the impossible. So right now, friends, we talked about the two changes. We critically analyzed those two, that the government is trying to tax is not upholding the principle of mutuality, taxing the clubs. Second, we talked about the input tax credit, that the condition has now been brought in. Rule 36(4) is tried to be given the backing. Now I will say, tried to be giving the 36(4) has been trying to be given a backing, but still the amendments that have been brought in will further be opening the Pandora boxes for the litigation. Right now, moving ahead. One person only says reflection in 2A, 2B, but no time limit except September due date 3B. Sir, you are right. Section 16 says that there must be a reflection in your 2A, 2B. But there is section 16(4) also, which talks about September. Sir, I didn't say your credit will be denied. I said your credit will be delayed. Reason, Rule 36(4). which says you will be eligible to 105% of the credit which will be appearing in your 2B. And if the other person will delay his GSTR1, it will shift to next month. It will not be the eligible credit for that month, and as a result, there will be delay. Right? I hope you got that point. Now, coming towards the next change, amendment in section 35, accounts and records. Mr. Purohit just referred to the audit. The audit that has been now no more, will now be no more, because friends, for the financial year 1920, these changes are not applicable. So the form for 1920 has also been available. The audit has to be done. Now, where we put the question mark is the year 2021. So as I told earlier, these amendments will be brought into force from a date to be notified. So let's see what will be the fate for the year 2021. But as of now, for 1920, yes, we have to accomplish our task and get the reconciliation statement 9C filed by a chartered accountant or a cost accountant. Now, coming towards what this change implies. What this change says, that now self-certified, it is the option, prerogative of the taxpayer, that whether he wants to get it self-attested or wants to file it audited. But sir, it nowhere says that you need not to match your books with your financial statements with the GSTR returns. The two datas have to be matched. So if I talk about, there is a relief, but this relief is not a blessing in disguise. I will not say, because this will lead to additional burden on the taxpayer. If I talk about, friends, if I give you an example, let's suppose a person comes to me, he has not paid interest. You say him, there is a particular liability, you are required to pay the interest. He says, I don't want to pay. If the two cases, in case you have to sign it as a chartered accountant, it reads your authorization. You will say, either this amount has to be paid, or I will be mentioning in the report, because this has to be authenticated by me in my professional capacity. This will lead to loss of revenue also at one stage. Now, the taxpayer, now when you are not going to sign it, you are going to file it, or the taxpayer goes to file it, it says, okay, if the notice will come, I will pay. May it be the penalty, may it be the late fee, may it be the any other amount, may it be the tax. Sir, nowadays when we have been doing the audit, we have been finding that the rental incomes, that the various commission incomes that have been coming, that is that have been showing the persons have not paid taxes on it. So ultimately, it is the section 35 and 34 that has been amended to remove the mandatory requirement, of GST audit by the professionals. Now it talks about self-certified reconciliation, which reconciles the value of supplies as in declared in the returns and the audited financial statement has to be done at the end of the taxpayer himself. So this might be lead to a loss of revenue to the government itself and more burdens. So now when assessment will be done, so at that time there will be larger interest liabilities at the end of taxpayer. So the taxpayer needs to compare the tax cost versus the compliance cost. So the compliance cost might have been meager in the front of the tax cost that they might have to bear. But as mentioned earlier, that it does not talk about financial year 1920, it is not applicable. We have to file the GSTR 9C for the financial year 1920 as certified by the professional. Now the person says section 44 amended says reconciliation of value. That what about ITC reconciliation? Sir, it is as same as before. It talks about that it talks about the value of supplies declared in the returns furnished along with the audited financial statements that has to be matched by it. Right, now moving ahead. So this was all about the annual returns, the self-certified, that now 9C is no more there. Now what about interest? What about interest on delayed payment of tax? Now friends, let me ask you, is this amendment was not there already, or it was there already? Right, this amendment was there already or not there already? It was there already. This amendment was there already. In the sense, this amendment came in, but the government promised that it will come from a retrospective effect. Yes, Mr. Saudagarji, it was already there. It came earlier, but it was not with the retrospective effect, which led to hue and cry. What was the amendment? That now the interest will be payable on only the net cash portion. For example, if I have 100 rupees output tax liability and I have 80 rupees ITC and 20 is the balance. So what it said, that you are required to pay the interest in case of delay only on this 20 rupees and not on the amount of ITC that was available. Net element and not the gross 100 rupees. Okay, but let's read this proviso a while. Sir, this proviso reads as the interest on tax payable in respect of supplies made during, please mind the words because I'm going to ask you a few questions. Chale, let me ask you. Now tell me, I asked you first thing, what happened? I made a supply in the month of November. I made a supply in the month of November, but I didn't show it. I omitted that. By chance, I omitted that. That was left. I had inputs. What I say, I had an output supply of 1 lakh rupees in the month of November 2020. Okay, I omitted that. And in the month of January 2021, I got to know that a particular sale was omitted. I showed it. I put that liability of 1 lakh and paid it through the credit. The ITC that was available. Now, what is my question to you? Will I be liable to pay interest on this 1 lakh rupees? I come to your point, sir. I come to your point. Somebody who has asked about the refund, it is already, sir, your name is not appearing there, so I'm unable to follow. The answer you are saying me is yes. Okay. Okay. Yes. Proviso to section 15. All are saying yes. Okay. So friends, now let's read the proviso with me. Let's read it together. Rakesh ji, Jyoti Masan ji, everybody, Nakul ji, okay. Sir, you changed the name over there. So all are saying yes. Sir, the answer to it is no. Now please read with me the proviso carefully. Provided that interest on tax payable, please, in respect of supplies made during a tax period, supplies made during a tax period, and twin condition, we made the supply in which month? November. Now see, made during a tax period means November 2020, right? Now, and declared in the return for the said period, it must have been declared in the period November 2020. For the said period after the due date. Okay, it means if the November return goes late, then the proviso will apply. But if you say the supply of one period, although paid from the credit of another period, so my dear friends, section 50 does not provide you this benefit. Directly, it will become a litigative issue. So what section 50 has to say, interest is payable because a particular return got delayed, then, and you are utilizing the credit, then the proviso will apply. Second issue. So the answer of yes turns to no. Now let's come to the next point. Second, I got a notice under section 73 or 74. I got a notice under section 73 or 74. And now my liability was made at 500 rupees. I had a credit also. I utilized the credit of 100 and was to pay 400 rupees. Now my question to you, will interest be there on 500 or 400? Rakesh Gupta ji is saying if ITC was available in the month, not payable, but ITC available, then interest. No, sir. Proviso does not make such difference. The proviso does not refer to. So many of you are giving the answer 400 and some are giving 500. Sir, it is 500. Reason. Now let's read the second part of the proviso. So the proviso is of 3 lines but have far-reaching impacts. Let's read it together. It says except where such return is furnished after the commencement of proceeding under 73 or 74 shall be payable on the portion of tax which is paid by debiting ECL. इलेक्ट्रॉनिक कैश लेजर पे मैं इंटरेस्ट पे तभी करने दूंगा अगर वो 73 और 74 से पहले करेंगे as a self assessor. If you have got the notice under 73 74, the proviso, this point will get covered under exception. So 2 points we discussed, friends, that yes, first, interest on tax payable, the word is and declared in the return for the said. I'm not saying it is, of course, a challenging one, but the direct benefit of section 50 is not provided. So now let's analyze this. All these points have already been made the part of this. Now, what it says, I think I skipped it. Right. Okay. First, it is a retrospective amendment. So first question that we talked about, that whether it is a amendment, yes, this amendment was already brought in through Finance Act 2019, Finance Act number 2 of 2019, which was later on implemented, but this was implemented not from the bad date. Now, through these budgetary provision, it has been given a retrospective effect with effect from 1/7/17. But friends, now somebody asked me, what is the impact? If I talk about the impact, sir, when this provision was not retrospective, the statement was given by the government that no recovery shall be made of the amounts of the preceding period also. Okay. They will not recover from us the amount which was prior to the amendment. But now it gives rise to the right of refund also. because this provision is now deemed to be inserted once it gets implemented, will be deemed to be there in the law itself from 1/7/17. And when it is from 1/7/17, and if I paid the taxes on gross liabilities, I have a right to claim the refund. So somebody in the chat box also mentioned it, and yes, you get a right for claiming it. Right? So ultimately, right to claim of refund arises where the interest has been paid on the gross tax liability. Moving ahead, reason I already told you, as it was decided in the GST Council meeting that it will come retrospectively, but as it was not brought in, it has been brought in through the budgetary provision. But where it does not give relief, sir, 2 points we discussed. First, one period liability shown in another. Second, if I say after the initiation of proceedings of 73/74, and third, if the amount, sir, if you say I could not set off and the same was lying with the of course, Rakesh ji, the period of 2 years has to be checked. But ultimately, from the back, sir, it might be for certain period, the 2 years might not have expired. You have to take in favor the cases, but you can also take the amendment as the base, as it has now been brought up. It has now been brought up. Right? So this does not give relief if the amount, sir, till the amount is not set off, it is not considered as paid. So on any unpaid tax amount, if it is lying in your cash ledger and you have not set off, the benefit is not available. The benefit is not available if one period tax has been shown in another period. So this is the example which I discussed with you all, that if it is a December tax and is shown, then the benefit is not directly available from the proviso itself. And third, if it is after the initiation of the proceedings under section 73 or 74. Right? So अभी तक हमने किस बारे में बात की? Section 16 के बारे में, clubs के बारे में, GST audits के बारे में, and now this proviso also, which has been given the retrospective effect. Now friends, moving ahead is the amendment to section 74. This amendment to section 74, sir, section 74, there are two sections, section 73 and another is section 74. Section 73 में हमें notice आता है when it is omission, not willful, not due to fraud. It is not a willful misstatement. But 74 is when it is due to the reason of fraud, misstatement, or willful misstatement or suppression. Previously, under this, now, sir, section 122, 125, 129, previously 4 sections were covered. 122, 125, 129, and 130. Now, I firstly give you an example to explain the provision. Sir, a person is there whose goods gets detained. Whose goods gets detained. रास्ते में उसका माल पकड़ा गया. His goods got detained. Now, when his goods got detained, he was covered by the provisions of section 129. It previously mentioned that if your assessment is completed, if your proceedings are completed under section 73 or 74, all those proceedings under 129 or 130 have deemed to be concluded for all the persons. The detention and the confiscation, the penalty proceedings, all used to be covered, all used to be concluded. But now there is delinking of section 73, 74 from 129 and 130. Now what it says, sir, goods detained hue. If your goods are detained, if your goods are confiscated, you are under 129 or 130, keep it as a separate proceedings. 73, 74 are separate. It has been time and again being argued by the professionals that it is actually an anomaly which has been now being removed. So now section 74 has been amended to provide that these are two separate proceedings even if now when your goods are getting detained, you are paying the taxes, you have to get the particular proceedings closed separately. 73, 74 will not lead to amount that the proceedings under 129 and 130 are also concluded. So now it was an anomaly which has now been removed. Now you have to get a separate proceedings done for section 129 or 130 when your goods get detained, when the vehicles get detained. Or, sir, previously it was for all persons, it will be liable to be concluded, but now 129 and 130 have been taken out of it. Only the sections that are covered now are 122 and 125. So 129, 130 are now delinked from section 73, 74. Sir, abhi hum dekhenge there are a number of changes in section 120, in section 129 and 130 itself, and very welcoming change in one way or another has been done, जिसको हम बहुत देर से कह रहे थे. These are certain anomalies. 129 where to apply 130. Those delinkings have also now been provided. But first delinking is section 73 and 74. Now, friends, one change, but how far-reaching impacts it can have. Friends, okay, you tell me before I proceed to it. Self-assessment tax, what it includes? Self-assessment tax, what it includes? It includes your tax under GST return, GSTR 3B or GSTR 1 also. GSTR 3B or GSTR 1 also. What is self-assessment tax? What it used to be? What it used to be? Okay, Subhashji saying it is 3B. Okay, who else? 3B, GSTR 1. Okay, Jyoti Nivasan saying 3B, all returns. Sir, GSTR 1 is not a return. GSTR 1 is a statement of outward supplies. R1 equal to 3B. Okay. Chaliye, now I tell you what the change that has been. Hardeep ji also saying return under section 39. Now, friends, what it was, previously it covered only the self-assessment tax that was there in 3B. In 3B. But now, if there is difference between your GSTR 1 and 3B, sir, when starting me, I told you that certain changes have been brought in. What the fake invoice people, they used to do, higher GSTR 1, either they don't used to file 3B or they used to file 3B with a lower amount. So the tax na pay karna pade, the credit keeps on flowing. Right? Mr. MBL, whosoever, 3B is not a return is another issue which has been discussed in various cases and various amendments have been brought in. Right now, we are not going into it. But even after the amendment in Rule 31, 3B has been made a return in order to overcome the judgment of AAP and company, AAP and company. But still now, GSTR 1 is a statement which is very clear-cut written in the law, right? So, as of now, I was talking about the point that previously the self-assessment tax included the tax only that was declared in the 3B. But in order to overcome this practice of showing higher amount in GSTR 1 and lower amount in 3B, now they said if there will be a difference, GSTR 1 is higher and GSTR 3B is lower, then this amount will also be taken as self-assessment tax. Now I take you to the amendment also. Now, if I talk about the amendment, for the purpose of this section, sir, section kaun sa hai? It is 75(12). The expression self-assessed tax shall include the tax payable in respect of details of outward supply furnished under section 37, but not included in the return furnished under section 39. Sir, change to ये है कि अब section 37 में जो आप sale दिखा रहे हैं and for which you are not showing it in section 39 under the GSTR 3B, that is also a self-assessment tax. But now it has far-reaching implications. What? Sir, section 75(12) says no show cause notice, no show cause notice, no opportunity of being heard, the recovery proceedings under section 79 can be started. So as of now, the tax which is under GSTR 1, if it will be higher, then the recovery proceedings under section 79 can be taken. One thing. Second point, if I talk about, sir, now in section 83, the bank account can be attached as per the proposed amendment. So when we widen the scope of self-assessment tax by including the tax payable on outward supplies in GSTR 1, not reflecting in 3B, first, if the GSTR 1 exceeds 3B, the same would now be construed as self-assessment tax. The impacts will be the short payment. If there is a short payment, 3B, you are paying lesser tax. It will lead to recovery under section 79. And even now the bank account, because you know now 79, now it is covered by the widening the scope of section 83. Now even your bank account can be attached. If there is a mismatch between GST, sir, what the law says? Law says the liability which you are self-declaring, which you are self-assessing, can be recovered even without a show cause, without giving the opportunity of being heard. Although we have LC Infra or Mahadev Construction in our favor also, but sir, those are the judgments. But what the law says, that yes, 7512 provisions will become applicable. So you have to be very, very careful now. Sir, all the provisions are aiming towards one thing. 1 and 3B must match. There should not be substantial difference. My words are substantial difference. So what it says, yes, now even that is a self-assessment tax. So moving ahead, the next change, I told you that the section 83 scope is now widened. If I talk about section 83, it talks about provisional attachment, जिसमें your property, your bank account can be attached. Friends, two changes in it. Two changes. First, in short, previously only few sections were covered. What were those sections? These 62, 63 assessments. No, if you are non-filer, if you are an unregistered person, inspections, and various 73, 74. These were the sections that were only covered. 6 sections. Now they have included the chapters. It means your property or bank account, the scope is now widened. If the commissioner is of the opinion that for the purpose of protecting the interest of the government revenue, it is not public interest, it is to protect the interest of the government or the revenue, then now in all the sections, even sir, section 59, self-assessment. Previously, self-assessment was not covered. Section 59 was not covered. Now it is covered. So section 59 to 64, 67 to 72, and 73 to 84, all the 3 chapters have got covered, scope being widened, and we pray that this power should be wisely utilized by the concerned officers. Second impact, it now covers the persons under section 122 1A also. Sir, what is 122 1A? There used to be a supplier, there used to be a receiver. Supplier used to supply the goods without invoices, receiver used to take the credits, and so on, right? Without bills, goods moving, or without goods, the bills are being exchanged. He was covered under the penalty provisions. He was covered under the penalty provision. 100% of the tax which the supplier has evaded, 100% of the input tax credit that the recipient has taken without the legal backings. Now, they have also covered the mediators, the kingpins, the person Please mind the words. On whose instance the transaction is done. On whose instance the transaction is done and who has been a beneficiary. On whose instance the transaction is done or who has been beneficiary. It means if you have been found, if any person has been found involved in between the mediator, the kingpin, even now his property and bank account can also be attached. Who are the persons? The persons on whose instance the transaction is done and who has taken the benefit of the transaction. In all these 4 cases, even his bank account can be attached. So friends, firstly, what it was there, that the scope of attachment of the property, and 83 attachment of the property and bank account, it was like when the quantum has decided, then you attach the bank account. But now what has been provided? Even where there is initiation of any proceedings, where the quantum is not even being decided, the same, even if there is initiation of proceeding, widened scope in all respects, initiation of proceeding, more sections covered, more chapters covered, more persons covered. The person who is neither the receiver nor the supplier can now, his bank account can also be attached. Even if you are an employee or you are a person who has been found, sir, company to karegi, the person who has taken the credit, the person on whose instance the transaction has been done and who has taken the benefit out of it will also, his property is also liable to be attached. So this is a point that before quantification even, which is again a litigative issue, the bank account can now be attached. So the gravity of the impact must be considered. Next change. Sir, I will come to this change, but this change is with respect to appeals, a very small, under section 129. Whenever you have to file an appeal, you have to pre-deposit certain amount. So when we used to talk about the pre-deposit of the amount, it used to be 10% in all the cases. In all the cases, if we want to file an appeal, we have to pre-deposit the amount. Don't worry, sir. Each and everything will be shared. This PPT is all yours. It will be shared. So you need not to worry about it, right? Now in this case, but let me wind up it another 10 minutes. My time will be getting over. So friends, what it says now, sir, pehle main aapko ek cheez, I would like to highlight one point. Section 129, which talked about detention. Your goods can be detained. It is found without e-way bill. It is found without proper invoicing. Your goods can be detained, detention or seizure. That 129 deals with. In section 129, previously, before amendment, as of now, till the amendment gets approved, it covers payment of tax as well as penalty. Now, sir, imagine a situation. I'm covering 2 amendments together. Please listen carefully, and important amendments. Previously, we used to be in a thing. My goods were going. The vehicle was detained. The goods were detained. They were seized. The vehicle was detained. Now, in that case, how it used to be a supply? Section 129 itself was made a charging section and said you have to pay tax and penalty. Now this anomaly has been removed. The word, sir, what it used to be, 100% tax you have to pay, 100% penalty you have to pay. This used to be the section before this proposed amendment. Now what it says, no tax, no tax. Okay, it means 100% benefit? No. Penalty, 200%. So ultimately, a legal anomaly, and we used to be how this tax has to be paid. So they have removed an anomaly, which many of our professional brothers have also rose this point many a times, that how 129 can itself be a charging section and tax can be levied. So they removed it and said now penalty has to be paid. What is the penalty? 200%. Consequent, one more change in the appeal section, which we were discussing here, section 107, which said In all other appeals, you are required to pay 10% as pre-deposit. But here, you have to make 25% of the pre-deposit. So now let's read it, what it says. It says, again, appeal against the order of detention and seizure of goods in transit can now be made on the pre-deposit of 25%. And sir, what my perspective is, and which I am considering it, is not in addition to 10%, it is 100% in lieu of 10%. So a proviso, a specific provision has been given that it is 25 pre-deposit has to be made, definitely leading to more working capital blockage. Section 129, which we talked about. Sir, see, the words were, I have made it old and new. Because, sir, there is number of changes in section 129. So section wise I have put in. It was applicable tax and penalty. Now the word applicable tax has been removed. It only talks about penalty. How much? Previously 100%. Now it is 200%. Number of changes have come in section 129, if you can see, but I've summarized it with the help of an example. And sir, can I take 5-7 minutes more, 10 minutes?
Yes, you can take. Please,
Okay.
please go ahead.
Thank you. Because friends, the next amendment is also very, very important for the exporters. So these two amendments just I would like to cover with you. Now listen, I made this chart. So section 129 is divided into two parts. Honor comes forward, your goods got detained, the vehicle, the conveyance in transit got detained. First of all, 129 is a penalty in action when the goods are in transit, when the goods are conveyance is in transit. Now, honor सामने आया, well and good. Honor सामने नहीं आया. Honor comes forward, honor does not comes forward. Two cases are there in 129. So this is the entire summarized provision of 129. Now, when honor comes forward, it might be the vehicle that contained taxable goods or exempted goods, and the honor is not coming forward. The transporter himself is there. Bhai, humko to pata hi nahi kiska maal hai, kiska nahi. The goods owner does not come forward. Even then, goods can be taxable or goods can even be exempt. Right? Now, 200%, Jibandas ji, it is 200% of the tax payable. I will give it with an example. Don't worry. Sir, this has a far-reaching impact. We all get a call. My goods got detained. How much penalty to be paid? How much amount to be paid? Has always been a question. Call the professional, whosoever is dealing with it, that my goods are detained at so-and-so border. This is the amount of penalty. So this section is important because it is of day-to-day usage. Penalty. Abhi somebody asked me, how much? 200% of what tax paid? Changed. It was 100 plus 100, tax plus penalty. Now it is 200. And sir, when there is no tax payable, when it is exempt, it used to be 2% of value of goods. Whatever, because it is exempt goods. So whatever was the value of goods, 2% or 25,000, whichever is less. So this is the provision when honor comes forward. Let's take the example of it. Let's suppose your party calls you up, your client calls you up and says, oh, my taxable goods worth 1 lakh with a tax rate of 12% have been detained, which were being transported without the documentation. How much amount now you are required to pay? Penalty. How much? 200%. Of what tax amount? 24,000. This first example got. Second, if the goods are exempt, the provision is same, no change. 2%. 2% of 1 lakh is 2,000 or 25,000, whichever is lower, 2,000. So if goods are exempt, 2,000. If goods are not exempt, then 24,000 if these are taxable. So these two examples we have covered. Now, coming towards the next, when honor does not come forward, what the law says now? Penalty equivalent to 50% of the value of goods. Or, sir, here also the word used to be tax payable. Now they have changed. Pehle to iska provision used to be entire different, less the tax paid and all. Now the provision is very, very simple. It says penalty equivalent to 50% of value or 200 of the tax payable, whichever is the issue of tax removed. It is only penalty that now needs to be paid. So ultimately, with the goods were of 1 lakh, tax rate 12%, what should be the penalty? 50% of value of goods, 50,000, 50,000 or 200%, 24,000, whichever is higher, ultimately 50,000. So you see, if honor comes forward, the amount will be 24,000, but penalty only. When honor does not come forward, the penalty itself is 50,000. And in the second case, it is 5,000. So the word tax has now been removed from section 129. Previously, it used to be tax plus penalty. Now it is only and only penalty. I hope I am able to clarify this point. Other than this, sir, now various time limits have also been provided. This I've already talked about, the important change. Previously, we used to get the goods released provisionally upon execution of a bond or furnishing of security. Now the provision is omitted. Now the goods cannot be removed provisionally upon execution of a bond or furnishing of a security. Previously, time limits were not provided for giving the notice of MOV 07 or passing of order. Now the time limit of 7 days have been provided. So a time constraint, that this is the time limit for giving the notice by the officer, and this is the 7 days from service of such notice is the time period for passing the order. Next, one more welcoming change from transporter viewpoint. So now I give you an example. Transporters, goods get struck, but it is not his fault. The truck was held, the truck was detained. It was the fault of the person whose goods was transported. It means it was the fault of the supplier or the receiver. But his truck is there detained. He's losing his revenue. His revenue is 30,000 rupees, let's suppose, or 10,000 rupees per day. He's losing his revenue. Now a facility has been given to the transporter that whatever is the amount of penalty imposed or 1 lakh, whichever is less, you pay it and you take the conveyance. The transporter can now release the conveyance on the payment of penalty imposed or by the officer or 1 lakh rupees, whichever is less. If he is considering that this mirror truck 15 days will be standing here, I will be in a problem, I'm losing my revenue, or 5 days will be there, he can just pay 1 lakh amount or the penalty imposed, whichever is less, and can take the truck away, and against whom the detention proceedings will get a relief to the transporters. Absolutely. Now friends, the next change, similarly 130, confiscation. Important. In what sense? Sir, there were 2 judgments, one by Gujarat High Court in Synergy Ferrochem Private Limited, and another was by Kerala High Court in Age Industries. What this said? This said 129, if you want to go to 130, 129 and 130 are linked provisions, because 130 gave a reference of 129. 130 deals with confiscation. Your goods will be confiscated, and it mentioned that the penalty that will be levied under 129, this amount cannot be less than that amount. There was a linkage between 129 and 130, which was like the 2 contrary judgments by 2 honorable courts, high courts. So as a result, now the overriding effect of 130, notwithstanding anything contained, have been deleted. Now it starts with where, if any person. It has no more overriding effect, one thing. Second, 129 linkage has been deleted. The point put on there is the aggregate of fine. What is the fine? If you don't want your goods should be confiscated, pay the fine and penalty equivalent to 100% of the tax payable. Okay, you want to pay the fine, you don't want to get your goods confiscated, then in that case then in that case, the 100% of the amount has to be paid. That there is delinking of 129 and 130. So ultimately, sir, it is actually the Honorable Gujarat High Court decision that has been put in, that 129 and 130 are now applicable in two different situations and are not linked to each other. Now, the most important change is the zero rated supply. Three important changes, friends. Just another 5 minutes to go for. Listen carefully. In case of zero rated supply, friends, what change? I just show you before amendment and after amendment. IGST changes, the only change and the most important. Friends, previously, if you used to supply anything to SCZ, all supplies to SCZ unit or SCZ developer were zero rated. Yes, there was a restriction in refunds that you will get the refund only if the same is for authorized operations. Now, after amendment, section 16, the Parent Act has been amended to provide, ki, listen, we will consider the supply to SCZ as zero rated only and only if it is for the authorized operation. First change, authorized operations for SCZs. Second change. Friends, previously we used to have two methods for the export or zero rated. Without payment or zero rated also, I should say, even SCZ. Without payment or with payment. Now, this with the payment of tax method is no more there. It will be applicable only in case of notified goods or notified persons. Now listen, before amendment, with payment of tax was allowed to all the supplies, even in SCZ or in exports. After the amendment, supplies to SCZ only for notified class of persons or notified goods. Jisko government notify karegi, only then they will take the benefit of with payment. Now, friends, it has 5. Sir, you want me to explain the authorized operation? Authorized operations are as per SCZ Act and rules. They have a list of authorized operations, various authorized service. The officer authorizes that in case of goods, and for services, they have a particular list. So those authorized operations which are as per SCZ have to be checked for. Now, linking to it. Friends, now after the amendment, you cannot go by with payment of tax. What is the reason? Sir, various bogus credits were taken as various bogus claims were filed by the exporter in order to curtail it because refund was automatic. Second, you used to take ITC of capital goods and cash. If you remember, with payment, without payment. If it used to be with payment of tax, the capital goods also used to get in cash. Now this will be stopped. This will not be available. Exporters now have to go for without payment, LUT method. Refund application have to be filed. No automatic refund. Sir, the government wants to curb, initial point, wants to curb fake invoicing, fake practices, malpractices. Sir, even in customs, they have brought the changes. Refund may, if you take any refund, 5 times the penalty has been imposed. Your goods are liable for confiscation if during export it has been found that at the backdrop. These are the custom changes I'm talking about, 2 changes. Confiscation under customs and 5 times of penalty refund amount if you take unauthorized refund. And here also they have stopped with payment of tax. It is only for the notified goods. Last changes under this only. Under this only, sir, 96B rule was given in export of goods. That came in the month of March 2020, where the proceeds, export proceeds were linked. That what this rule said, that even if you do it under bond or LUT or with payment of tax, the export proceeds must be realized as per time of FEMA. Expiry of 30 days, if it is not brought within the expiry of 30 days, you have to give back the refund. Now the provision has been given a legal backing in the act itself by amending the section that yes, now the government, what they are going to say is now the registered person must, in order to safeguard it, he will get the refund only even in the case of goods the payments are realized. So the 96B rule has now been given the legal backing in the parent act itself. So now with this I end up my deliberation, and over to you, sir.
Thank you very much, Anchalji. So it's a very lucid presentation as usual. So because I heard you in various other webinars, it's organized by all our fraternity. I'm very much thankful to you for accepting our request first of all.
It's my pleasure, sir.
Thank you. Ganesh Puri sir, any closing remarks from you?
Thank you, Mr. Satnarayan ji. Achal, you have done excellent job, and I don't think any comment is required on that. You have elaborately discussed each and every provision.
Yes.
Lucidly explained the same, including reference to the relevant judgments. Very nice. My all blessings are with you.
Thank you so much, sir. Blessed indeed. Thank you.
Thank you very much. And you said would you mind sharing your PPT in
yes,
the
sir.
chat box?
I just shared with the, on WhatsApp to you, sir.
Yeah, no, you can do it in here itself in the chat box.
Okay, sir. I do that. Give me a while. Just a minute. Let me close that. Sir, it might take a minute because I have to get the PPT.
Yeah, it doesn't matter.
Doesn't matter. You can take your own time.
खत्म हो गया ना फिर क्या करोगे
वो present now PPT दे रही है.
Right, sir. I'm attaching it. Just a second. Right, sir. I have uploaded it. Sir, can you see that?
Yes. Dear participants, our learned speaker has attached the budget proposals. It was GST particularly. You can download it.
Thank you so much, sir.
Thank you, everyone. Narayanji, I am leaving now.
Yes, sir. Just only 1 minute. I will not take much time, sir. Thank you very much. 1 second.
It's not reflecting on my system.
No, it's there in the chat box, sir. You can see it. Chat box she has uploaded.
Chat box, okay. No, it's not there in the chat box also.
Yeah, I'll share it to you. Otherwise, I'll share it to you.
Okay, no problem.
Yeah, I'll share it to you. I downloaded it.
All right.
Thank you so much to both of you. I request our Arvind Mishra ji to propose hearty vote of thanks to all speakers as well as participants. Arvind Mishra ji. Unmute kariye.
Arvind Mishra ji is not there, it seems.
Yeah, he's there.
Thank you, Mr. General Secretary Satnarayan ji, for giving me an opportunity to give vote of thanks. First of all, thanks to today both session chairman of past president, respected Sir Ganesh Purohit ji,
for giving valuable and constructive opening remark. Thanks to today's speaker, CA Raghunath Akasam, for wonderful derivation in respect of analysis of economy and incentive of MSME sector in Union Budget 2021. And today, a rising star of AFTP, CA Achal Kapoorji. She is
Yes.
attached in all amended section and classes of indirect tax part of Union Budget 2021. Thanks to immediate past President Dr. Ashok Sarafji, President Mr. Raoji, and finally a big thanks to all virtual delegates for spent valuable time to join. Thank you very much.
Thank you all. Thank you.